Today's video, I'm going to share with you smart money concepts in trading that weekly range. If you're someone that's looking to trade once or twice per week to capture a bulk of that weekly expansion, this video is directly for you. Now, if you're someone that's a scalper or you're someone who's looking to trade a lot more frequently, then you can take something away from this and apply these methods to your trading plan. All right. And so with the weekly expansion, what we're looking for ideally is we're looking early in the week to see where price opens. We want to see where price manipulates a majority of retail traders, you should say, and we're looking where that manipulation happens, and then we're looking to capture that expansion. Okay, so to illustrate, we're looking at where price opens. Okay, let's just say this is the start of the week. We're looking for price to manipulate to the upside, and we're looking for price to expand to the downside. Okay, so if we are a smart money trader or we're trying to follow smart money concepts, we're looking to chase the high, to hunt the high, I should say, to go short, and we should hunt the low to go long. Okay, and so in this instance, or in this illustration, we're using Euro JPY for this present week that we're in, and we can see that we have been obviously bearish for the week. So knowing, all of my, fundamental analysis, and knowing that we have a bearish bias, or we can be expecting the draw on liquidity to be to the downside, then we already have our bias. We know that we're going to go bearish, right? We're taking that into account. What we're going to be looking for is we're typically looking to get in on a manipulation on a particular day. Now, normally the weekly profile of a bearish week, usually the high of the week forms usually between Tuesday to Wednesday. All right. And in this illustration, in this example, I'm going to show you how you could have captured the high of the day on Tuesday, but then also show you how you could have captured the high of the week on Wednesday if you missed out on Tuesday. All right, so if we go down to the 15-minute chart, what we're going to look for is that opening midnight price, New York time. Okay, and right here you can see that price opened up at 128,636. Okay, we're going to draw that out, and what you're going to look for is price to go above opening price. This is where you want to short the market. Okay, we know that we already know, like, we've done our higher time frame analysis. We know that they want to take the market lower, right? And so with that being said, we're going to allow Monday to play out. Okay, you do not have to capture the high of the week on Monday. You want Monday to really play out to give you a number one confirmation that they want to take the market lower. Typically on Monday, you really want to see the market go on in the opposite direction usually, because that could be the manipulation day within that weekly expansion or that weekly candle. All right, and so as you can see here, you see price opens at midnight, we go above, we short the market above. Okay, so these are the areas where you want to get in at. Now, if you miss that high of the week, that's totally fine, because what you can do is pull out your fib tool and catch that retracement, get that OTE pattern, right, and get in at the 62 or 70 level, and then boom, take it down during the New York session. All right, so if you're not a London trader, that's totally fine. Now, Wednesday, we had a very similar situation, but we actually price open, price went above, right, took out all of this buy side liquidity, and you came up. You could have been a seller here at the price above. So this way, if you would have gotten in, if we go back to the hourly view, I'm just trying to show you a kind of like a broad's eye view. If you would have sold here, you would have ate a little drawdown on Wednesday because price would have came back up. And I mean, it depending on where your stop loss is, you may have even gotten stopped out. But even if you did get stopped out, you had a second entry. Now, in this instance, if you sold here, you were right. And if you had a good protective stop loss and you know that the bias was really strong in your favor, you can hold that trade and could have captured all the way until Friday, and you would have captured over, let's see, if you would have got in here, you would have captured over, let's see, well, I would have definitely gotten out around New York. That's over 90 pips. Okay. Now, the better entry was definitely on Wednesday. So here you can see that was over 90 pips as well, but you had little to no drawdown. So what I want you to do is I want you to go through your charts and start just looking at that midnight opening price and look at, just practice price going above or below. Now, if we were going long in this market, it would just be reversed. We would be looking to capture that low of the day. All right. And so this one little thing is a game changer when I found out about the New York midnight opening price. When you see that midnight opening price, you're looking for price. If you have a bias, you're looking for the price to go into the opposite direction. You're trying to trade into that manipulation and capture that expansion either for the day or for the week. Now, this trade here, if I would have caught the high on Tuesday or on Wednesday, that was one maybe two trades for the week, and I didn't have to overexpose myself or over leverage my position. So definitely look at the midnight time, draw it out, see where price manipulates to, and I guarantee you're going to see a big change in how you enter the market, and your overall win percentage and everything will increase from there. So until next time, make sure you guys tap into the Discord. Make sure you guys tap into the live stream. Subscribe, like, and we will be dropping more videos coming to you shortly. So till next time.